We just wrapped up the first week of June 2026 here, and we got escalation in the war in the Middle East, and this reverse carry trade is starting to accelerate over in Japan. What does this mean for our crypto markets? Well, it's part of the broader liquidity crisis and liquidity being sucked out of the crypto market. Why did Bitcoin go down below 60,000 yesterday? Why did XRP go down below $1.07? Because liquidity is being pulled out of everything with the private credit crisis and people trying to get their money out of those private funds, with Japan having to sell off US treasuries as this carry trade unwinds and they try to protect their currency. We're going to explain why this month it could come back to a real tipping point once again with the next Bank of Japan meeting coming up later this month. So without further ado, straight on into the update. If you appreciate what we do here, it's current events, financial markets, and how to take advantage of the greatest transfer of wealth in world history. I'm your host, Zach Rector. Appreciate your support. Let's show you what I'm talking about. XRP down to $1.05 this early hours of this morning. And so I did fill my orders all the way down here, $1.33, $1.22, $1.21. And then yesterday I did have my buy order for $1.07 filled, filling up the XRP bags, along with H-bar too, actually. Bitcoin went below 60,000, and so this is the double bottom. I thought that this was actually going to come in the first part of March, and it didn't, right? We pulled back close again to 62.4. That was back at the end of February. For XRP, we did pull back to about $1.27 at the end of February, but we didn't come down to this double bottom low until 3 months later. But during that entire time, we stayed true to our analysis that the private credit crisis was still going on. We hadn't solved the Strait of Hormuz, and that's a real choke point and pressure point specifically to this reverse carry trade. And the reverse carry trade was still unwinding, right? So there's just too many factors lined up for us to believe in the bull trap rallies that took place over the past 3 months. We let this market come to us, and now our orders are getting filled. Now, despite over half a dozen currency interventions here, it has not stopped the USD JPY pairing for ripping back up above 160. Now, 160 USD to JPY is the level where the Bank of Japan starts to panic. And so we're watching here the currency interventions and then this big drop. All of that effort was only able to get the pairing down to 155 for a brief period, and now it's moving back up. I'm going to switch over to our bonds so you can see the 10-year JP 10Y. That's the 10-year bond out of Japan, right? We were able to get a little bit of buying on the 10-year earlier this week. It was interesting. And I told you guys I was going to look into this, follow back up. Sure enough, it was just a brief moment where there was some buying on the bonds before it started to sell off again. And we basically wiped out all of the gains because you have to understand that the bonds here, it's the inverse, right? When the bond is doing good, meaning more people are buying it, that yield's coming down. So it's the inverse of your typical chart. Just try to keep this simple for everybody to understand, right? So this was actually a gain. This big red candle was people buying that 10-year bond. But as you can see, we wiped out that gain, and it's back up to 2.65. And this thing's approaching, right, 3%. After decades of 0% rates in Japan, you're at 2.6 on the 10-year, 3.5, basically 3.6 on the 20-year, 3.9 on the 30-year, and you're also at 3.75 on the 40-year. So now what we have seen as when this reverse carry trade starts to come to a head again, when it becomes top of mind, is when it's already too late to have taken your profit in the market and put yourself in position, whether that be rotating out of stocks and or crypto as well too, because we've seen both markets see pullbacks. And if you look, right, back when that USD versus JPY pairing was starting to bounce back up here, that was all through the end of February into March. Flip over to the Dow Jones chart through February into March. That's when the Dow Jones crashed 10%. That's when the S&P 500 crashed 9%. That is when the NASDAQ 100 crashed over 12%. And look at what the NASDAQ did yesterday. Big red candles over 2% on a lot of the major indices, including the S&P 500, a big 2% red candle coming in. And then, of course, crypto got slaughtered as well. Now, as it relates back to the Iran war and the escalation that we saw, it was confirmed last night that we did have CENTCOM admitting that they took down some drones and then they attacked some radar spots and some positions in the Strait of Hormuz. So in response, Iran was sending missiles to over Bahrain. We were seeing missiles intercepted last night there, Kuwait, and so it looks like the war is back on. It looks like the ceasefire is breaking, and this is something that I've been anticipating for the past month. Right? It's like the double bottom, 60K Bitcoin back down to $1 for XRP. Sometimes your timeline gets adjusted. I mean, that's nothing new for us in the XRP community, right? We thought XRP was going to $1,000, right? So timeline's been extended here, right? For the last 3 months, we were wrong until we were right, and then the orders get filled. Now, on Iran, in the past month, I've been saying we haven't seen the climax of the conflict. The Strait of Hormuz isn't opened up, and Iran's not really at a table. I don't even think there is a real negotiating table. We're relaying messages to military leaders in caves. That's what's happening, right? And so for the past month, I've been saying until we've seen the climax of the conflict in the Strait of Hormuz actually opened up with real flows, I'm not ready to say that the bottom's in. I'm not ready to say that we're in the clear, and definitely not ready to say that the bull run is on. Now, in response to the escalation that we saw the past 24 hours, Iran is now threatening the United States with complete and absolute closure of the Strait of Hormuz, following tonight's U.S. attacks, warning it will now be fully responsible for the consequences on oil and gas exports per FARS. With this closure and global oil inventories now weeks away from hitting historic lows after IEA nations drew down strategic reserves faster than any point in history, $200 plus oil is imminent. I'm not going to agree to that. I am expecting oil to bounce with strength, though, as the futures market will open up tomorrow. Right, I'm recording this Saturday morning, Sunday evening. That's when the futures will open up. And we can see this is the same playbook that they've done week after week after week. And today, this week, oil came down simply based off of Trump's comments that the war was going good. I mean, I'm paraphrasing, but it wasn't even like an in-depth response. It wasn't a tweet. He was asked by a reporter how it's going, and he just said things are going good. And it was like that was all the news that we needed to push oil back down to $90 per barrel, a couple red candles here to close off the week, and to bring it down to where my oil long, where I had actually entered into my oil long. So I was kicking myself yesterday because I was already in 50% profit on my oil long as oil spiked up to about $97 last week. So I was 50% in profit, and I had a feeling, I was like, gosh, here comes the Trump tweet. And all it took was him saying things are going good. And it's like oil comes back down to 90. My trade, I think on Coinbase futures where I'm trading it, it's slightly in the red. So I'm down like a few bucks right now. Basically back to break even, and all of my profit was wiped out. But I held on to it. I held this position because I was still expecting this escalation. We got the escalation. We're going to see oil open up. It's going to gap up probably above $95, approaching $100 per barrel. And so I am expecting to make money on that trade. But as this relates to the carry trade, right, as oil prices go up in Japanese yen, this is where inflation starts to ramp up and accelerate at a pace that's too hot for the Minister of Finance, the Prime Minister, and the Bank of Japan, who are trying to keep the situation at bay there. And I think that they're in tight coordination with President Trump and Treasury Secretary Scott Bessent. Scott Bessent went there just a couple weeks ago, right when that currency pairing had gone back up to danger territory. Scott Bessent arrives on the doorsteps, and he's speaking with the Prime Minister, the Minister of Finance, and the Bank of Japan. And now we bring this to the next deadline that I want you guys to be aware of. This could be the next big fuse. The June 16th Bank of Japan meeting is the next one. And it's anticipated that they're going to be raising rates by another 0.25% from 0.75% where they sit here today up to 1%. Now, this would only be the second hike towards a 30-year high on these interest rates. And that is what causes that carry trade to unwind, right? When it no longer makes sense, when you can no longer borrow with cheap Japanese yen and roll it into something else, the US treasuries, the equity market, the crypto market, when that makes no more sense, you have to unwind that trade. When you can't roll over to a fresh new loan with cheap Japanese yen interest rates, you have to unwind these positions. And we're down to very dangerous levels in the digital asset space where hedge funds are going to be forced to unwind positions as well too. And so it's a big unwind with, this whole structure that was built around the carry trade. It's a big unwind in the crypto market, and it's a scramble for liquidity across the whole market. If you look at the private credit crisis, the redemptions that are stacking up that we saw in Q1 are happening in Q2 as well too. And those private funds are hitting their gated redemptions where they're capped at 5 or 10% in a quarter. And after that, they're saying, that's it for this quarter. You can only get 5% out. All of this, including the rush and scramble for liquidity to go participate in those big IPOs of OpenAI, SpaceX is the big one immediately, and Anthropic. And so it's a scramble for liquidity. We've been describing this reverse carry trade in Japan as part of a bigger global margin call. And that's exactly what's happening. And so to wrap this back up, what does this mean for XRP and for you as a digital asset investor? Stay liquid. You need liquidity because we can go back down even further from where we're at here today because none of these issues are solved, right? The reverse carry trade still happening. That carry trade's still unwinding and has much further to go. And with the Bank of Japan interest rate decision this week, that could be the next spark. And what we saw in August 2024, when this started to accelerate and unwind, we saw big drawdowns in the stock market, big drawdowns in the crypto market. So don't be expecting the reverse carry trade unwind to lead to XRP or price appreciation of any sort in the immediate future. In the immediate future, we get a sell-off and a bloodbath. So be ready for that. And we're going through it right now, and there's room to go further because the carry trade still needs to unwind further. The Iran conflict hasn't been solved. We haven't opened up the Strait of Hormuz. Private credit crisis hasn't been solved. And people still want to flood the AI boom, the SpaceX IPO, and these other IPOs. So liquidity is being sucked out there. We already saw huge drawdowns, some of the biggest losses that we've seen since the Liberation Day on the Trump tariffs last year for the stock market. So stay safe out here. Stay liquid. Make sure that you don't get liquidated or margin called. And then ideally, you'll have that extra dry powder to be able to buy the blood in the streets like we've been doing over the past couple, weeks here. And I can't tell you the exact bottom, the exact day, the exact hour or price that we're going down to. So I just show you guys I've been dollar cost averaging. And I'm going to continue to do so. This is my third bear market. The factors that are driving this bear market and the activity in the markets now are different from the previous cycles, but there's a lot of similarities. So when you've already been here before, you know how to navigate it. So join me right here as we finish up this bear market. If you guys appreciate the content that we're putting out here, please help us out by liking this video, sharing it out far and wide. And we're going to be doing our Discord weekly call here in about an hour at 11:30 a.m. Eastern. So if you guys want to join us in the private group, sign up through Patreon to get access to Discord. We'd love to have you in the family. Stay safe this weekend. God bless you all. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.